Just a bit of background history. My first encounter I had with SAS was when I was still at Barnard Jacobson Led, those who might know the name. And I dealt with a gentleman by the name of Brendan Holland, who was at the time still at Sasfin many years ago. I don't want to mention away my age, and at that stage, never thought that at one stage I would be working for Sasfin and be responsible to help place the notes in the capital market. It was a great experience meeting people like Roland Sassoon at the time, who's definitely a pioneer in this specific asset class funding. We had privilege, Lease and West, Lease and we had the back ground roadshows with Roland at the time, and many people after that. And I'll ask Michael to introduce the executive team, but people that I want to mention is Linda Frawley, CEO of the rental finance business, the interactions we had with her, and the inspiring passion of the business she's doing. Well, here in person later on. And also Magda Oosthuis, credit side. In red there. Thanks for all your time and out from you, and then specifically our Brown at our legal side. Brains in that part of the business. Rest of the people like Harriet, even you, MD of the rental funds and the actions. So, getting to the order of the day, we will encourage attendees to ask questions during the presentation rather than waiting to the end. So online, I'm sure the Shiva will be that post questions that respond to. If you can just raise your hand or type question in the chat, put it to the panel. For any questions requiring a higher level of detail, welcome pose them and then respond in more detail afterwards. Now going to hand over to Michael Sassoon, the CEO of Sasfin Holdings, thanking him for his exceptional leadership that inspired us over the last year or so, and leading us to, I said, a new sunrise. Good to Michael.
Thanks, Leon. Welcome, everyone. Confirm that you can hear me live. Problems with the sound.
You just need to speak up.
Okay. Sounds a challenge. Will you just let us know? I think that our intention is for this to be formal engagement. We haven't. We're not going to be presenting any slides in any meaningful way. Even though we've got a very detailed investor pack, which I think Jessica has taken everyone through, and that's all available for the roadshow. But the priority today was to take you through the journey that Sasfin's been on over the last many years, in particular the challenges that we faced over the last couple of years and where Sasfin is going. And then for Linda, after the break, to take you through the Sunderland has been and where we're taking our rental finance business. To take any questions and to engage through that journey, because it is an interesting story. It's been a complicated journey and in a very different position today than we've been many years, and in particular over the last couple of years. Before I do that, I wanted just to pay tribute to Desigan, because Desigan, as our group treasurer and head of debt capital markets over the last decade, has dealt the funding for the total group, but Sasfin Bank. Many of you will have dealt with Desigan over the years. But Desigan, I regret to advise, is leaving us. He will be joining African Bank as their head of global markets, their treasurer, which is a great opportunity for Desigan. What I think most of you will be aware of is we've done a lot with African Bank over the last 2 years. We sold them our capital finance and commercial property finance businesses. Also licensed our digital banking platform through African Bank. And through our process of exiting the bank, we facilitated a lot of introductions of people to African Bank, such that by the time we concluded our total engagement with African Bank, about 125 Sasfin individuals employed by African Bank, which includes in the region of about 55 that went with the sale of capital equipment finance and commercial property, as well as 70 people worked inside our business banking area, inside the group, and who will not be required as part of Sasfin 2.0, but are exceptional people, helped us navigate some difficult times, add huge value to African Bank. One thing which has been important to us through the strategic reset, which has obviously been a very challenging process, has been to minimize job losses, to ensure that people find the best opportunities for them. And I'm very confident that this engagement, we are also engaging other banks as we decide in terms of some of the vacancies that they are running. We've been able to minimize our job losses to less than 10% of our total employment base, even though we'll only end up employing about 60% of the people who are working here at the beginning of this. It means that we facilitated introductions and or through natural attrition, 35% of the people have left Sasfin, 31% of people have left Sasfin without us having to conducting new retrenchments, which was very important. Desigan was assured that if he wanted to, he would have had an opportunity at Sasfin for many years to come, because of all he's played. Desigan, as the treasurer of the bank, running a very complicated balance sheet through a very complicated time, has developed huge skills and the opportunity for him to run the African Bank balance sheet, which is significantly larger than our balance sheet and will be significantly larger than our balance sheet when we finally done, was a wonderful opportunity for him. We encouraged him to take on the opportunity, which is very sad to see him go, because he's a great friend and a wonderful contributor to Sasfin over these years. But I think most of you have dealt with Desigan over the years. I'm sure he'll be coming knocking on your door when bank issues paper and other purposes over the coming months and years. But Desigan's also given us his commitment to be supported by Anban, the CFO of African Bank, Kennedy, the CEO, that he will continue to support whatever we require in terms of the restructuring of the securitization vehicle, the final stages of that, and the immediate issuances in front of us. But we are very fortunate that Leon and his team Sasfin vehicle the last few years, as well as Jackie Ebony, who we contracted with, and many of you might know Jackie. Nedbank and Arawani for many years, very, very seasoned in both debt capital markets and in credit. So Jackie has joined us as a contractor at this time to assist us together with the very capable skills we have in the rental finance business, we've got all the depth that we require to continue to ensure that the SaaS vehicle is run as it has been run, and that we that grows thereafter. So Des, at some point I think I might ask Des to say a couple of words. I'm not going to do that right now. Maybe we break this. So if we just take a step back as to the Sasfin story. My job here is to talk about the Sasfin story. And then we'll talk about the Sunderland story. If we go back to life before leadership, we go back to life before gold leaf tobacco. We kind of go back to 2022. Sasfin was on a journey. We had an exceptional rental finance business, which we had been growing. We had bought the fintech rental finance business. We had bought Access rental finance business. That, together with our capital finance business, on the basis of our asset finance book and business, really market leaders and have been many, many years in the rental finance space, thanks to Linda and her team's kind of leadership and their direct engagement with their clients, and then we'll get much more detail about that. That was together, that was collectively an 8 million rand book and business, and we produced healthy returns, and we were growing meaningfully in both of those areas. We had a very strong wealth management business, so joined here by the CEO of our wealth management business, Errol Zeki. And that business had also done acquisitions and transformed from a stockbroking business into a management business, and was seeing very good growth, producing healthy returns. And we were deep into an investment cycle on a business banking business, business and commercial banking business. We employed at one point about 150 people. We saw that there was a gap in the business banking segment. We were offering credits into that space, we were offering banking into that space, exchange into that space, and it was a big commitment. It was a very big investment. We also built a very strong digital banking platform, one platform, which was able to provide businesses with a whole host of digital tools. And it was an expensive journey, but we were starting to see some good traction. And we were doubling down on that strategy of going deep into that business. That's really where we were sitting at the beginning of 22, obviously having just come through COVID challenges. And appointed a chief executive of that area, by the name of Sandile Shabalala, who today is the chief executive of Access Bank. Sandile ran the bank's business banking area. So we were really kind of committed to building out this area. But it was challenging, even before all of the drama that kind of came with gold leaf tobacco. It was challenging. Tier 2 banking has become exceptionally challenging. Most of the tier 2 banks that were in existence are no longer. The Best Bank is about to go to Access Bank, assuming the Reserve Bank, Minister of Finance, approve that deal. Grindrod Bank went to African Bank, Ubank went to African Bank, Mercantile Bank went to Capitec. All the banks that we were competing with in that tier 2 space essentially have left the space. There are a couple of new entrants. Typically, the new entrants are backed by huge shareholders, very large groups, like ARC are backing Time Story, and they've got a specific digital orientation. Discovery Bank, Digital Bank are here today. Those are very different kinds of banks to the ones that we were competing. And then what happened is, I remember the call, on August 22, call from the Daily Maverick to say that what's happened with you guys and Gold Leaf. And at that moment, I knew very little relative to what I know today about what happened between us and Gold Leaf. And I kind of, that started a journey, which many of you have been part of over these last couple of years that we've engaged you. through our various roadshows with different questions, which essentially meant that we were catapulted into having to completely change our business model. What was triggered from that story, there were things that happened before that. I'm just using that date as like a key marker, August 22. But there were many things which happened after that, which meant that we had to move quite fast in shifting our strategy. So what we decided was we were very worried about the reputational risk that emerged from the first media, if you will, prior to any regulatory or legal actions. We were worried about it then. Despite our concerns, the vast majority of our depositors, our funders, and our clients and our staff constantly backed us. So we were calibrating for a bigger reaction than what actually emerged in the immediate aftermath. But I'm very glad that we calibrated on that basis, because what happened thereafter was infinitely wilder than what happened there before, from our perspective. And in essence, we decided that we were not able to kind of continue this deep investment into the business and commercial banking area. We were going to focus on backing our champions, which was the rental finance business and the wealth business, where we had strong competitive advantages, where we had very strong competitive positions, and which were, in essence, far more easier for us to back in terms of the capital required, the human resources required, and where there was real scope. And that meant that in beginning of 2023, we went through a round of mutual separation agreement. While that was happening, the regulator now started to up that. Post the media, the regulator, in many ways, they were very badly embarrassed by the media, and they felt that they had to, from our perspective, they felt that they had to make an example. And our perspective is informed by a lot of information, because when you appeal regulatory actions, all of the considerations that the regulators had to make become discovered. So we do have a lot of insights into what was going on in the regulators' minds at the time. They felt that they had to make a significant example. But what they did was we were under an investigation by the regulators, but we ourselves were concerned that because we didn't really fully appreciate what happened with Gold Leaf, we weren't sure the extent of the issues in our own business. So we ourselves also called for an independent forensic investigation, which is quite grand. So we had these rooms, if you go down to the 12th floor, 12 officers were just full of investigators, and they were doing a deep dive into everything, every transaction, every client, every trade, every board meeting, every risk meeting, every audit meeting, etc. It was very stressful, as you can imagine. We got wind already in and around March or April 2023 by a very unexpected source that the regulator was considering these hugely severe actions. We didn't imagine it, because from our own perspective, we asked our lawyers and our legal team what their assessment was of the likely fine that we could expect, because our human investigation numbers were something like 15 million rand or 20 million rand that was the expectation at the time, just based on what happened over here, what's any precedent in South Africa or globally, the size of our balance sheets, etc. But someone whispered to us that they thought that we would receive these huge actions. We were worried about the liquidity because of the reputational damage. As I said, we weren't sure exactly how depositors might react. So what we did in March of that year is we sold our specialized lending business to Greenpoint Capital. It's a very strong team, run by Paul Pretorius, is in the front row here, and that team went across. Greenpoint, very nice portfolio of assets, And that was a first step. And then we went through that process, actually, we went into this negotiation with African Bank regarding our capital finance and commercial property. Fast forward to October of 2023, what happened was we then got the first sanction letters. The first sanction letters were much more than where the final sanction actually landed. I'm not allowed to disclose what that amount was, but it was a big number in terms of anything that we were expecting. And we were now of the view. Okay, so we got to, before we had closed out our year end, many of you would have to deal with us about the late results in that year, which was very heavily complicated by this late issue of an intention to sanction, which we and our auditors had to get our heads around. How do you disclose this? What provision is considered? What contingent liability is considered? What's the technical accounting standard? What's the legal assessment? It was a big engagement between us, our lawyers, PwC, their lawyers, just to work out exactly what is expected from an IFRS perspective and a JSE perspective in terms of these actions. Amazingly, I say miraculously, but in terms of how you faith, right? The very next day, African Bank said, "What are we doing about this deal? Why aren't we moving faster on the deal?" That enabled us, really within 10 days, October the 13th, we had done the whole deal with African Bank. And we publicized the deal. We agreed all the terms, full term announcements. That was very important to us because we were worried that through the process of the sanction process, that was going to spook the market for our depositors. But if we were doing this big deal, that would demonstrate that we were going to have ample liquidity and far strengthened balance sheets to deal with the risks emerging from these actions. And it would give us the time, the space to be able to tackle these actions, which we would have to do because of their quantum. And that deal then is eventually gone through we signed the full deal in October 23. By the time the regulators and the Competition Commission and the Minister had finalized everything, the final payment for that deal came through in March of this year. An 18-month program from the date of signing the deal to the full closure. The other thing which we have done through this journey, as I mentioned it earlier, is we've licensed our platforms up and running. The world is the fastest turnaround to launch a digital business banking platform in the country. They've taken on our digital team. It's a very capable, it's a very strong platform. And as I said, we've ensured very minimal job losses through this process. And where do we stand today? Look at the Sasfin position today. Is we have been actively closing out bank accounts, clients' accounts. It's been a journey which we commenced over last year. We're sitting with very few client accounts left today. We will have closed out all our accounts by the end of August. We have been settling our depositors because we've been sitting with all this huge cash that came from liquefying our loan book. And we're sitting with a cash to deposit ratio, something like 90% at the moment. So we are the most, as of today, we're the most liquid bank in the country, by any kind of relative measure. What we are now doing is we are, some of the banks have some representation here. We're now in the final stages of the bank's certain funding lines for parts of our business that were historically funded by deposits. But it's a very small amount. That should all be concluded within the next 6 to 8 weeks. Once that is done, we will be in a position to fully settle all our depositors and return the bank license. Also agree with all of our staff who are staying, who are going to African Bank. So that full workforce planning will be concluded time we get to the end of this year. And what will Sasfin then be? So Sasfin will be Sasfin Holdings will be an investment vehicle. Sasfin Holdings is owned also through everything, as you must be aware, we delisted the business. Sorry, yes.
So you said that there's 50% of the workforce that's remaining. Is this that will remain if you expect? Or are they still for?
That's what's remaining.
Maybe to repeat the question.
The question was 60% of our workforce remained through this restructure. It's split basically half in wealth, just less than half in our wealth and asset management business, and half in our retail finance business. So it's about total headcount, expected total headcount once we complete, in and around 500 people. And that will be split 200 or so in rentals, about 230 or so in wealth, and then a small team to kind of manage the balance of our residual assets. So I'm very happy to take questions in the middle of the presentations. Please feel free to interrupt at any point. So where we are, what will Sasfin be? Sasfin Holdings will have transformed from what was an integrated banking group. And as a bank holding company, everything inside a bank holding company is regulated by the Reserve Bank. So Sasfin Wealth, even though it's its own separate legal entity, because it was a subsidiary of Sasfin Holdings, was in some way regulated by the Reserve Bank. It wasn't a bank. Our private equity investments, in some ways, regulated by the Reserve Bank. The Banks Act governs how a bank must operate as well as a bank holding company. So we will transform from having been an integrated banking group into an investment company, investment holding company, investment. And we will have two primary investments. We'll have our investment in our wealth business, which will go through its own repositioning in the coming weeks. And the wealth business has performed exceptionally well through this time and has seen good growth. And it's developed very healthy offshore earnings. The wealth business as well is very capital light. We don't do any credit out of our wealth business. And any links that did exist between the wealth business and the bank have largely been dealt with in the last 2 years. So there was a time when there was a lot more between Sasfin Wealth and Sasfin Bank. That's largely been dealt with. The balance of it will be dealt with in the coming weeks. And we will have our investment in the rental finance business. I just want to go into a bit more of the technical structuring of that for a moment. But again, we'll take you through the detail. At the moment, the rental finance business sits inside Sasfin Bank. Business sits inside the bank. But of our 4.5, there's a couple of people here. So Linda will talk in a few minutes, CEO of this business. Harriet, who's been the group FD, has been appointed as an MD of this business. One of the reasons we've done that is because it was very integrated into the bank. It was very important to us that this business is set up standalone. The philosophy of the year is that there are no shared services. The rental finance business, beginning to end, it's business, its origination, its credits, its operations, its finance will all sit inside one instance. And Linda and Harriet kind of complement each other really well in terms of what they both bring to the table. And then Mike Ross is the financial director of that business. Mike joined us a couple of years ago. Another rental finance business. There were a few financial reporting challenges we had, which Mike has dug very deeply into with his team. And he's got a very strong finance function and capability with the finance business. He will continue to oversee the credit function within the rental finance business We have a very strong credit team over there. Martha is well known to many of you. It brings a very strong risk lens from a credit perspective to the business. And then our Chief Operating Officer, that area is not here, Lady Van Place in Como, and our Chief Technology Officer, guy called Alex Ellsworth, aren't here, but they're both very seasoned executives in that area. And then Howard Brown continues to play an important role for the group. He's been the head of our legal function, and is our company secretary. He's fulfilled many other functions as well. He'll continue to provide that into the rental finance space. He's been with us very long. 19 years. So currently the rental finance business is housed inside Sasfin. But the book is about 4.5 billion rand today, net of provisions. And 90% of the debt funding of that book is provided by securitization. So only 10% or so, about 400 million rand of that book today is on the bank's balance sheet. 90% of the book is inside Sasfin. The vast majority of the debt issued against that book is AAA rated, or very highly rated. It's in Series 3. As Leon indicated, since 1991, the securitization vehicle is run really well, and we see that as the primary source of funding. Even though there are some deals that we write in that business which are not securitizable, they don't meet the eligibility criteria. Those will either be funded with our own equity or from bank funding. And as I indicated a bit earlier, we're very in the final stages of putting in the stability we require from the banks. What will happen is at the moment there's a subsidiary of Sasfin Bank, Fintech Pty Limited. That is the old Fintech business. Fintech will become the new holding company of the rental finance business, that legal entity. Fintech in turn has two subsidiaries. It's got one subsidiary, Fintech Underwriting. Fintech Underwriting will become the originator into Sasfin. So it's all inside the same group of companies, which means it's much easier to restructure from a regulatory and tax perspective. You're not bringing in any third-party entities. There's no discharge of assets. It all remains inside the same group of companies. But Fintech Underwriting will become the originator into securitization. It already is an originator into the securitization vehicle. Some of the deals are originated into Sasfin Series 3 via Fintech Underwriting. The intention is that it will become the originator, which was historically Sasfin Bank. And there's another entity there called Fintech Lease Receivables, which will become the operating entity of the rental finance business. And that will be the servicer to Sasfin. So the servicer to Sasfin is currently Sasfin Bank. That will move to Fintech Lease, which will be the employer of the rental finance individuals. And in all of the sales of the rental finance business, and this is all in the presentation, we'll share the detail with you, will be done by Sanlam. Sanlam is the market-facing brand of the rental finance business. All the equipment suppliers we've dealt with over many, many years, they relate to Sanlam. Sanlam has got a very good reputation. We nurture these relationships, we do it inside Sanlam. And that restructure essentially means that Sasfin will now sit underneath the Fintech operating entity, which is a wholly owned subsidiary of Sasfin Bank, which in turn is a wholly owned subsidiary of Sasfin Holdings. Once we've exited the bank license, that entity moved up underneath Sasfin Holdings. So that is the final stage of the restructure. The benefit of this is that we'll ring fence this rental finance business from some of the challenges that the bank entity has to still contend with, in a way that enables it to operate as a standalone operating entity backed by the same shareholders, the same executive team, the same funds in place. We've gone through this very carefully with the banks. We're comfortable with it, and it will all be. This should all be concluded in the coming weeks. We've also taken the Reserve Bank through this detail. Obviously, it's important that they are very comfortable with everything we're doing in order to settle deposits. This also, I'll take the question now, this also enables us through this restructure to draw down on the bank funding, which will be the final stage of our reset. So what you'll then face, you'll face Sasfin. Sasfin will remain bankruptcy remote, it will remain as it's always run, the same directors. There will be no change to Sasfin from a structure perspective, other than the fact that the same people be servicing Sasfin, albeit from a different entity, and the same people will be originating deals into Sasfin, albeit from a different entity. Can I come back to that question? I will deal with it. So just to be clear, once we've emerged, Sasfin Bank, the entity will remain, not liquidating the entity. The entity will remain an entity which we will own. It will not be a licensed bank anymore. Any claims that exist at the moment against Sasfin Bank, we will still have to deal with. Be very comfortable and confident we can deal with this. Any assets that will have left Sasfin leave at value. So there'll be no creditor will be compromised through this process. Every single asset that we take out of Sasfin Bank, we done it on a fair value basis. Typically book value, because most of the assets are very close to what the value should be. And then we will fight our various cases. But what is important is that in the extremely unlikely scenario that we are unsuccessful, these businesses benefits from any of those actions. And there'll be no risk to these businesses or to their funders or to their operations through this, because to the degree we've bought assets out of the bank, would have paid for it with cash, settle the depositors, and whatever equity is left, that is, in essence, the maximum that a creditor, a successful litigant or creditor would have against the bank. That would have no ability or gone through a very careful process on this. There will be no risk to any of those businesses. So, if I can talk about the regulatory actions, as you're aware, we're facing fines of about 150 million rand on a net basis from the Prudential Authority. We have the SARS action against us. Damages claims, a claim indeed, 8 million rand. They allege that because of our negligence, these former clients of ours were able to take money out of the country, which in turn meant that SARS were not able to get their tax from these. The way they calculate that is they take the full amount that they allege went through Sasfin Bank, left the country, and multiply that by a VAT rate, and they multiply that by an income tax rate for considering any costs or anything else. And that is how they get to the 4.8 billion rand, which in of itself is hugely problematic for obvious reasons now, in terms of even consideration. But delictual claims are almost impossible to prove. And in this instance, based on any credible lawyer that we've seen, including the top lawyers in the country, like Katz, Ventrengo, etc., they are emphatic that there is no merits to this claim. They were so emphatic that they allowed us to put out a SENS announcement, which said that they are of a few claims. Lawyers to do that, you can imagine, it's quite unusual, especially lawyers of that caliber. We earned off that client base, that many of which we self-identified and reported to the regulators and closed proactively when we became aware of suspicious transactions. And we earned collectively over about a 10-year period, 15 million rand in gross income of those clients. Unfortunately, we didn't earn any profit off those clients because all the income was stripped out by the broker, who was part of the syndicate, together with the staff who operates as part of the syndicate. So we earned zero. Actually, we earned any losses off this syndicate, as you guys can imagine, try and quantify lost opportunities, etc., etc. At the time, before we became aware of the extent, we earned total 15 million of total income. And if anyone has been in a foreign exchange business, you understand that the margins here in foreign exchange are paper thin relative to the volumes that go through the business. So therefore, based on any precedent that we've seen, we can't understand how the Reserve Bank got to the numbers that they made that very clear to them. Many representations, we've always tried to engage proactively, although numerous occasions tried to engage with SARS. They have been unwilling to engage. The Reserve Bank have been very willing to engage, but we still are very far apart as to what we believe is fair and proportionate. They believe is fair and proportionate. And the matter will now go through an appeal process, the Reserve Bank matters. Just as an interesting aside, because there is no precedent for this level of fine relative to one's balance sheet, that to look at some international precedents. European Central Bank has pretty clear guidelines as to what appropriate fines should be and how you calculate those in terms of very clearly related steps, quantifiable steps. One of the possibilities is to take the income, the profit actually earned activity, and to gross that up by 2/3, and that can be. That is an example that is used. So in our world, if you took the profit, it would be zero, but even if you took the gross income before any costs, you get to a number of 20. The other way to do it is to take it as a percentage of one's capital base or one's total income earned inside a department. Total income is a maximum that the European Central Bank contemplates, being 10% of the total income earned by a bank in a year. Relative to that, our total income in any 1 year would be 800 million rand across all of our product lines within Sasfin Bank. So if you apply 10% to that, it would be 80 million. That's the wording used by the European Central Bank in a legal maximum. So we don't really understand how the Reserve Bank got to their number, and we haven't seen anything which gives us any reasonable understanding of it. I'm telling you this in forum. We don't like to fight with our regulator, and we don't like to fight with in the public domain. So we haven't said anything to the press, and we haven't got to that. That's not how we operate. But I think it is important to about this and to back us that we share transparently our position. So we will continue to go through those processes over the coming months. The way it works from a legal perspective is that the Reserve Bank eventually will issue a fine. In order to issue a fine, there's all the steps that they've already They've got to give up, they've got to issue an intention to fine. We then have a chance to make a whole host of representations. They then have to consider our representations. That's all happened. Then they issue a fine. Post the issuance of a fine, we can either accept it or we can appeal it. We're appealing it. If you appeal it, actually two different fines inside this fine. One is in terms of FICA, the other is in terms of the Financial Sector Regulation Act. In terms of the appeal process, first port of call is to go to a tribunal, which is set up inside the regulatory. So you can either go to the FICA tribunal, the FICA appeal board services tribunal, which is its own appeal. So we're now in that process. We've submitted affidavits, they've submitted replying affidavits, we will reply to their replying affidavits. So we're in that back and forth at the moment. Sometime probably towards the end of the year or early in the new year, the appeal boards will hear these matters. They will then have to make their own assessments as to whether or not Reserve Bank acted appropriately. Some of that is then also subject to appeal. Either we or the Reserve Bank can appeal the appeal board's assessment. That appeal would then go to the High Court. Essentially, the appeal board is as like a magistrate level in terms of the legal appeal process. And after that, we could be hopeful the appeal board facts. And by the time we get there, we set up our business in a way where these matters really be between the shareholders and regulators and SARS, because all of our clients, all of our staff, all of our debt funds, all of our other stakeholders operating in businesses which are completely ring-fenced from this act. So that will take away the noise in terms of how that will impact. It's our Sasfin Bank itself. How much equity will remain inside Sasfin Bank the time we reset it, the time we set the deposits? The moment Sasfin Bank's equity base is about R1 billion. As I said, we expect that we will sale of these assets will happen again. So we don't change the equity of it. Sasfin Bank is incurring some costs, and all the revenue and operating will move out. So we do expect there to be some erosion of that equity base through the natural burn rates, as well as we've already written down the vast majority of our assets. Sitting with 60 or 70. Take that off in terms of the but it's the burn rate and the costs. Obviously, they're about 800, which includes 55 million rand provision on the fines. So if there is any of the legal actions, regulatory actions result in more payment of 55 million. Further, it's a better outcome in the 55 million. The total group equity sitting at 1.5 billion. The balance of the equity sits inside combination of SAS, the wealth business, the rents and finance business.
Is it just that it's made up of fintech underwriting and fintech essentially the legal entity that supports
There are just fintech fintech underwriting, Lease, Receivables, SAS.
why couldn't you just make both the service and originally fintech?
So the reason is that originator will have a warehousing facility from everywhere. Warehousing facility. The pool sits in that warehousing facility, operating entity sits outside of that. But I think underwriting is essentially an SPV, warehousing SPV.
You mentioned quite a bit. Are there any talks of like an acquisition of Sasfin by African Bank or merger, or they seem to be quite involved in various transactions with guys?
So we're very committed to our rental business and our wealth business long term. Many parties over the last 3 years have tried to approach us on both of those businesses. But we don't be backing both of those businesses. In that more. That's an acquisition fail. So I'm sure we want to do more. The businesses are not for sale. Just to say that. What is essentially happening? In addition to what they bought from us, they've taken a lot of stuff that we closed down. They've directly onboarded. To say that within that senior executive, in Sasfin Bank's senior executives, there'll be about 5 or 6 people operating in our expo level, one level below our expo. Very senior. To note, so I think I was starting to say this. The shareholders of Sasfin, that's our family. We own just under half of the group. It's Workhold. Owns just under 30% of the group. It's a crowd called Opus 18, which used to be known as Capricorn, which is the private, which is a private investment vehicle in total. Owns 10% of Sasfin Holdings, and the management vehicle owns the balance, together with a couple of very, very small minorities, which will probably at some point, they remained invested post the deals, which will probably at some point in the coming months. Up and off. The family, Workhold, and Opus 18 are very aligned. Each one of those shareholders are long-term shareholders. They've been along this whole journey with us from the beginning, incredibly understanding and supportive through a very challenging time. Workhold and the family injected more money, so effectively this obviously suspended dividends through those last couple of years, which was supported actively by both Workhold and the family. At some point, we further capitalized the bank resources from Sasfin Holdings just to ensure that comfortable we were running our regulatory ratios appropriately through all of this noise. That capitalization of the bank was supported by the major shareholders. None of the shareholders had exit to their fund structures, investment structures, equity, money in the business. They all see this business over the long term. There's great alignment between the I think that you've got the right combination between people with deep services background, investment background, highly credible parties, which I think has the perfect foundation for these businesses to operate. Say that to the degree that any of our funders would want to engage our shareholders, especially now we've got listed where it's more appropriate to have direct engagement with shareholders. We've done that with some of the banks, which was very well received, and also at the end of last year, Gloria Sorobi, who was the founder of rejoined our Sasfin Wealth Board as the chairman, which kind of further demonstrates her personal commitment to growing up the total Sasfin story. That makes sense at that time. In terms of how we set up Red's finance business, it wouldn't have made sense at that time for it to come into the banking group, because then you have to have an independent chairman, subject of regulatory processes, etc. Last chair behind this. Putting back the wealth business, we lost very little business, but we were definitely growing at a faster rate prior to the negative media that we achieved in 2023 and 2024. But I will say that as of the beginning of this year, towards the end of last year, we're starting to see some good growth again. Like some very nice institutional mandates recently, and the growth is definitely coming back. What Errol and his team have done exceptionally well is we've lost no critical resources in the business. That's also very important. Some of the competitors to the wealth business, but can imagine also the private client space, which we won. Some of our competitors were actively targeting our talent staff during all of the rounds of media, but everyone's remained here. So that has been a very important for me, a very positive takeaway from this whole journey. It's how our people really stuck by us, and even the people who are leaving us, leave this research. They like testing this example. People are very similar kind of caliber in terms of what they brought. They're leaving us genuine friends in a way that hasn't, in a way that hasn't anyhow way, shape, or form with compromise what we're trying to achieve. I think that demonstrates a lot about who Sasfin is, about what's inside this business. Highly in these individuals, organizations. And I think that our people felt, assuming our people are good, which I'm very comfortable with, that our people felt was anything to the reputational stuff regarding the integrity or ethics of the organization. Our good people have left it on something. They stuck with us, clearly articulates all of us up to the market that while we made mistakes, just own it. We could have actually stronger controls in certain cases. It's never anything other than genuine commitments. What members our chairman did hire due to reasons in 2020. Apologies.
Maybe Michael, could you switch your camera? Just use that.
Apologies. Yeah, better now.
Then in terms of different rentals and the strategy, there are, if you look at the market, in terms of what you're paying, fundamentally, in the traditional area, that's the first point. And the second point, you have previously mentioned, right, essentially off balance sheet. And how would you look to go about it?
Let's understand the second question. First question just for the balance of people is asset classes, which industry types, and we can focus on in the equipment rental business. Does that change? So what's important to note is that through this, through these challenges, we did curtail credit. That was obviously important. We felt it was the prudent thing to do. Over the last couple of months, we have opened up credit more. We're definitely starting to see appetite. What Linda will talk about, what will what's very important to me is the suppliers. We really back our suppliers. So what the suppliers originate is very important. If you've got a strong equipment supply, and they've shifted their business model to include, say, generators, to include solar, or to include other types of equipment, they're going to supply into the market. They're going to want funding solutions. And we will look to back them, providing those funding solutions. Obviously, we used to, inside this business, also have the capital equipment, the yellow metal, the mining, construction, etc. All of that's gone to African Bank. We've got no intention to go back into that business. That business is better funded in a bank than it is inside a non-bank. It's a hell of a competitive space. So when we were in the capital equipment finance space to win a deal, we were typically going toe to toe with a bank, with a big bank, one of the large banks. Whereas in the equipment rental business, none of the banks play in that space. They used to, none of them play in that space. All of our competitors are non-banks. We're the largest. You see a lot of prospects. We move into different parts of it. We've also done small scale in the past. I think once we just focusing on this business, we will be new opportunities. Is we finance some software, which works really well for certain types of businesses. You don't have an asset against that. We claim, but typically the renter of the software is a very strong credit. Able to, they don't pay, they're able to turn off the software. So there's a very strong way of kind of incentivizing. So there are different types of asset classes that we think we can move into. We've dabbled in these spaces. We haven't had any meaningful in them. We're quite far down the line, building up these capabilities 3 years ago. And then with everything that was going on, we held back because we were containing credits. We wanted to make sure our bread and butter business would not compromise. Generation of how we grow our rental finance. Another thing to note in that business is there are lots of small players, other books that are out there in the market. Love to do a couple of acquisitions in that space, so that is something which we'll definitely consider in the coming. In terms of your second question, I think the question is What we've done, what's happened in the past, we come across a deal for a blue chip, okay? Say a 50 million rand deal, but to do that deal, you have to put a battery for a large. That deal looked at that price, I would say, fine, much less than what we would normally. That deal wouldn't meet the securitization eligibility criteria. So what we've explored in the past with some of our funders is whether they would provide us a discounting line, because the funder might be very comfortable to take on that direct exposure to a blue chip at those kind of rates, and we can then earn a margin on it as opposed to being the direct funder. That question. So we definitely see opportunities in this space. Not something which we actively sought at the moment because we haven't had those lines in place. But I think if we had the lines in place and the team knew we had a 200 or 300 million rand discounting facility priced appropriately for future credits, I think we could get that. Senior will be very important to the supply. And they'll be very, very sensitive in the bonus. Other things to note while we're talking about assets we have, which might be of interest to audience. There's an high demand supply of these assets in the market. Inside the securitization vehicle, we have a subordinated debt layer. That, as you know, we build up big cash reserves at SAS. So sitting beneath the subordinated debt layer, we have first loss layer as well as equity slack. So the subordinated debt inside the securitization itself, that's about 330 million. Across Series 1 and Series 3, 330 million. Vast majority of that SAS still owns. Some of it is held by third parties. We've had institutions express interest in that paper. The rates make sense. That is paper that we will looking to reduce our exposure on. But we obviously have skin in the game, and we understand to our debt funders that they want us to make sure that we've got appropriate skin in the game. But that is a very nice layer of higher yielding paper. That's inside the vehicle. Very nice deck on that. I think that's my presentation. Any other questions? Yes, you can just like to say something. So just to thank some of your new funders, just to thank our funders helped us through this time. We know you have to face credit committees and there's been a lot of noise around Sasfin these last couple of years. So we very much appreciate your continued support. It's very important. Demonstrates the strength of institutions that we represent. And I think that we've enjoyed the relationship with the top institutions in this country since 1991. Our first vast assurance. Obviously, now that we are exiting the banking space, that becomes very important to us, and we're available to engage and to. And I think that Jackie in particular felt that, from her perspective, having Sasfin on the other side, there was she wasn't aware of everything that was going on at Sasfin, and she felt that value to this kind of engagement and be very comfortable with more of these engagements. And for you also to kind of get a feel around people in our rental finance business. So I think if you spend time with those individuals across the value chain, sales, credit, operations, finance, the controls that we built in that space, and one thing which we're very clear on is that while we become less regulated as a non-bank, not listed, definitely understand that strong controls, strong governance, strong kind of compliance, and those are things which we actively build, which are appropriate for the businesses that we will be in.
In terms on the point of the thing and any other point you don't you also regulation in this.
So that's Sasfin Wealth, obviously is regulated. A license, two license based broker, authorized customs. And then rental finance, obviously SASC is listed. So we are governed by the debt capital markets listing. That really primary regulator that will have to come off of the securitization in terms of all of the other ordinary kind of regulator. Financial. Anyone online? Online, I can ask it. Okay. A couple of words and we will break for coffee. To read your let's say quarter past 11. Yes.
Most of it has been said. I really just have two key messages. I'll get the messages. Thanks for letting me speak before Linda because she's quite a tough guy. The first one is, I think, really just to reinforce whilst I'm still in Sasfin Blue, the infrastructure around your investment success. We often speak about, what a good credit structure it is, but I think this is an opportunity to showcase the management team with it, the stability, the integrity, the conservativeness of the credit. And now with Harriet leading the operations and Mike, probably the best rental finance FD in the country. I think we've got, and I'm not going to say anything about the shield trip, but I think that infrastructure, that kind of management team, looking after this business, which you are all investors in, is something that we as Sasfin, me as an ambassador of Sasfin, is really proud of. And whenever I sat in front of the investor community, even during the difficult times, answering those difficult questions was one thing that was really not a concern of mine. It was the unwavering integrity of our management. I want to reinforce that. It wasn't just me, it is, and it always will be the entire management. And the second point is really to thank all of you. From this side of the table, the next time we're going to meet, I'm going to be an investor, and I have told the team, I told Leon, I will push him on pricing. So
Not happening.
so my DPN team, I will ask them all the difficult questions. They had to come back because they said, Sasfin. We'll email you your own questions to you. Yes, I really do want to thank all the persons in this familiar to me for many years. We've had some robust discussion. I'm really glad that everything I did tell you actually panned out, and the investments were safe, that good returns have always been a good protocol between us. And Michael can block his ears for this one, but I look forward to continuing the relationship. Thank you. Thank you.
Yeah, you can. Everyone's back.
I can't imagine.
Thank you. So we'll continue. Gonna hand over to Linda shortly, and she'll take you through her business. Linda, over to you.
You see the difference between Michael and I is I've got a magical dragon on my laptop. That'll give you. I know Michael thanked all of you, but I personally want to thank you because securitization is my lifeblood. It's enabled me to grow the business. When I started in Sasfin nearly 25 years ago, our book was at about 300 million. We grew it with capital equipment to 7.5 billion, with the rental book being 4.5 billion. Without securitization, I wouldn't have been able to do that. And there's a lot of investors here, and I'm very happy to meet you. I've met Alawani with absolute pleasure, that I actually haven't met. So it's nice to see the people behind, the people who have enabled my business to grow and to support the South African economy. And not only that, is to see we've been securitizing since 1991, and to see there's a lot of investors here that have securitized with us for probably over 20 years, even 30 years. And in the most difficult time, like I said, the last 3 years have been incredibly difficult in Sasfin, trying to navigate the storms. And the investors stood by us. And the fact of the matter is, we recently successfully rolled. We were going to roll 490 million and we rolled 600 million. And that's a testament to your belief in us and a belief in my business. So it's very important that I personally wanted to thank you, because you are the lifeblood behind my business. Recently, I met with Jackie, and it came to me last night, and she asked me a question. And the reason I'm going to tell you this, because all of you have been investing in our paper based on AAA paper, based on paper. So it's the first time you get an opportunity is who's the team and what is the business behind the paper. And so I'm very excited to share that with you. But anyway, Jackie asked me, because she's new to the business. Desigan doesn't ask me because he's worked with me for a very long time. Linda, what is your secret sauce? What is the secret sauce that makes this business as fantastic as it is? And when I spoke to her, I told her like 20 things. It's my team, it's my clients, it's my relationships. And I went through, but actually, like if you, there's a sauce that happens that makes you unique. And my business is unique and it is exceptional. And that's the reason why we've become the market leader. As actually a small bank, to be able to become the market leader and grow as we have, there has to be something different. And last night it came to me. I'm just going to be very surprised when I say this. I was like, there's two things that have made my business great. One is belonging. So I have to bring in the Linda style here. Is belonging. Is that everyone who deals with us belongs. And when you have that, you can only but have a great company. My team feels like they belong. They will go to war for me. They will go to war for Sasfin. In fact, when all those media articles were coming out, my team was ready to go toy outside the Reserve Bank. I mean, they are invested. They don't work for Sunland. They are Sunland. And when you get that type of commitment and passion, you can't just be anything but great. My clients belong. We're an extension of their business. We're not just a bank or a finance provider for them. We grow with them. We train them. We know their reps. We know their wives. We know their children. I'll just give you an example. When I started in this industry, I was 19. The client that gave me my very first deal when I got into sales is and I'll give my age away just because you can see how exceptionally unique and special it is. I was 19. I'm now 56. That client who gave me the first deal is my client today. So where do businesses have where you're still dealing with clients for 30 years, 35 years? That particular client has been to my wedding. He's seen me. He knew all my previous boyfriends before I got married. And there's many stories of that. We belong with our clients. We are an extension of their businesses. Our shareholders. If Sasfin started as a family business all those many years ago and have grown into this exceptionally good business from a little family business, but what we haven't lost is family. Our business is family, and to find a corporate and a bank to still hold those family values. And if you want evidence of it, it's what Sasfin's just done with the staff going to African Bank. Most corporates would go, okay, let's get the best deal for the shareholders and the stakeholders. We did what was best for our people because our people are our family. And they feel part of the family, and we treat them as part of the family. That's belonging. Our shareholders aren't shareholders that once a year or every quarter when I go into a board meeting want to know my numbers and say, what are the numbers? What's your ROE? What's your cost to income, Linda? They want to know, how's your team, Linda? How's business going? They invested. I don't think there are many corporates where your shareholders are so invested and understand the business. Sean will come to my functions and he knows my team by name. That is special. It's a belonging. Our investors, and that's why I'm so excited, because I want you to belong in my team. I want you to understand the essence of my business and belong. You already belong because you're my blood, you're my lifeblood that funds my growth. But now I invite you into this belonging. We've recently had quite a few meetings with Investec, Nedbank, and African Bank, and Standard Bank. And we've had amazing, because I've got to replace, where do I house the deals before they go into the securitization vehicle? I need a warehousing facility. And it's been the most humbling experience to deal with these banks, because they have been so forthcoming and so supportive, because I've got to replace the Sasfin Bank side for that portion of business. So now we're inviting those banks to belong. Do you see that essence? It's different. It's like that's the success of my business. Then I had the aha moment of what is my secret sauce? Because there's two things. I've got two ingredients in my sauce. Don't fall over namafta. Is credit. Credit has allowed me to grow this business successfully over the last 30 years. And why I say that is that I'm going to rewind a little bit, because it's a memory that will always be forever etched with me. 2008, we were a little rental business. We were growing. We were great. We were good. We were exciting. We were, in a way, the little newcomer. We were not the market leader. Yet this big giant called Absa, with a huge balance sheet. My rates to the market range between prime plus 4 and prime plus 7. I don't sell on rates. And Absa's rates were prime plus 1. So it was like they were, I shouldn't say this, but they were like the Springboks on the field at the time. And I was the team trying to challenge them. So what happened in 2008? And what will be forever etched, we were rolling our entire book at the time. I think it was, at that point, it was about 1.2 billion. And a few days before we were going to roll the book, the market went because of securitization, the whole market. I think you'll all remember, especially the credit people and the investors, where you were in 2008 when all of this happened. Now, we're like 3 days away from rolling our paper, and the market collapses because of securitization. So you can imagine that fear. Anyway, we go to market, And though in those days, and some of you are going to remember this, it is not that you're sitting with Desigan and you've got laptops and things. You used to go into a little room, lock the door, and people would phone in. Am I right, Desigan? People would phone in, say, okay, we take in 100 million, no, we take in 300 million. And I was standing out the door. I wasn't allowed in. No one's allowed to phone in. No one's going to phone out. And Roland walked out, and I know you're praying, we're going to do this. And he said, not only did we securitize the full 1.2 billion, but we were oversubscribed in a market that just. So one of the investors or one of the economists asked Roland, he goes, in terms of this, your book in a very, very difficult market is so stable and behaving. And Roland's answer to that is we make good decisions in good times. Okay, good decisions in good times. So what happens with credit? What ABSA did at that time, because the market collapsed and the economy was in disarray, what did they do? They pulled back on their credit because they were approving everything. They went, That allowed me, I didn't pull back on my credit. And you know why I didn't pull back on my credit? Because my credit has always actually been conservative. The decisions you make in good times are the ones that are going to bite you in bad times, not the decisions. It's too late. If you're going to tighten up your credit in bad times, it's too late because the deals you approved in good times, you must remember it's a long-term funding, it's 3 years to 5 years, are going to come back and bite you. So why I say that enabled us. So ABSA pulled back, we remained the same. And what clients want is consistency. They don't want sometimes you're here and sometimes you're there. They want to know who they're dealing with, who their partner. Their businesses are reliant on me. Their business are reliant on their funders because 90% of my market does not do cash deals, they're rent deals. So they can't be in this yo-yo relationship. So what ABSA did is they tightened. I became the Springbok, took them out, and about 7 years later, ended up buying their book. Because our credit has consistently remained the same. A tweak here, a tweak there. The last 3 years, we just tightened a little bit more than normal, but we've never had reckless lending. So without that consistent credit, I wouldn't have been able to grow and have such a strong book. So when you look at the investor presentation that Desigan gives you, you can see it's a strong performing book. So credit, Magda. Tribute to you, thank you. And Roland, and through all the years, my credit manager that reports into Magda has worked with me for 25 years. I've had the same credit manager. So her depth of understanding of my business is understanding the product, my clients, the vendors, credit partners with us to make sure we put the right quality credit on our books. So that is my secret sauce. Just also talking about credit, what's also so amazing about our book, and probably why a lot of you have remained with us for so long, is our book represents South Africa. So I'm a very proudly South African person, and I love saying this because I am South African, and I'm going to do whatever it takes to make this country great. And I believe my purpose is supported by what I do, because I'm not picky. I finance every South African business in this country, which makes the investment so beautiful because I'm not industry specific. So if you're in manufacturing and or mining and the mining market collapses, you're not going, I've got a problem. So I finance deals right from the little sole trader to the doctor, to the lawyer, to the CC, to the PTY, to Old Mutual, to Stanlip. We finance the entire spectrum of the South African market. What does that give you? Granularity. So for my book to go horribly wrong, and we've seen it through many bumps in the economy, you would need the whole South African economy to collapse because we service the entire economy. So it's a really good book. What's also amazing about my book is it's not made up. I've got a 4.5 billion rand book. I don't have 100 million exposures and 200 million exposures. My average deal size sits at 137,000. So your credit risk and your credit spread is very, very good. Yeah. So let's just go to my distribution model. When I said my clients belong, I have probably 600 active suppliers. Our model is based, in fact, I think most businesses, if they could have this model, it's one of the best models that I've seen. And I'm not just saying that because it's my business. So I have over 600 suppliers. I have 32 AEs. AEs are account executives that look after these suppliers because we're not arm's length. We are very, very close to our vendors. We have what you call a high volume, high touch business. Most businesses, you either low volume, high touch or high volume, low touch. We both have high volume, high touch. My team processes, and that's why I think Michael alluded to it. I have, and at some point, I'm very happy to take any of you through my process. I have over 200 people in this team. I process 4,000 deals a month. I pay out about 1,000 because Makta only approves 50% of the deals that come my way. So I've got this incredible machine that can process all these deals while keeping exceptionally close to my clients. So I've got 32 salespeople, but I'm getting 4,000 applications a month. Is that my vendors are actually working for me. So I don't have 32 salespeople. I've got 1,000. I've got 1,000 people that go out there and sell my products. So our clients, so we partner with them and they go out to the end users. So the majority of my business is office automation. We have Nasha on board. We've got Riker. We've got all the big brands. We've got Arctic, Minolta, all the big brands. Basically, we are the preferred financier. Sometimes you won't even know we're there because on the bigger dealers, sorry, yeah? No, it's all about service. It's all about service. So we don't have exclusivity, but we aim to be their preferred financier. And to be honest, you want your dealers to have a second or third funder to keep their doors open because we don't approve everything that comes our way, because we do have quite a conservative credit. They still need to run their businesses. So as long as they give my competitors the deals I've declined, I'm happy. So you've got all these people going out and selling for you and bringing you the business. I mean, isn't that incredible? With no cost to you. So it's an amazing distribution model. We have my team. So that's my dealers. So we have dealers, like I said, that we have dealt with for 10, 20, 30 years. They've been with Sasfin. Through this last 3 years, my clients stood by us. In fact, they were also ready to go to war. I have lost no dealers and no staff because of that loyalty and that commitment and that relationship that I'm speaking about. My team. So if you get a new salesperson, even if my competitor gets one of the best salespeople in the industry who knows everything, I think I have them all, but just in case they get one of those, how do you compete with somebody who has a relationship of 30 years? My average time of my salespeople in my team, in fact, I lie, the average time in my entire team of people being in Sunderland is 15 years. And that's taken in consideration. Through COVID, I took on about 24 graduates because we also invested in supporting and growing employment in this country. So it's not just about business. So I've taken 24 graduates that came and everyone was employed by us. I think one didn't get employed because they didn't have the right attitude, but the other 23. So that's taken in from COVID, 24 brand new people. I still have an average period of 15 years, unheard of in the financial industry. So those relationships are deeply entrenched. And not only are the relationships deeply entrenched, the understanding of our business. because it's such a high volume business, if you are not on top and know your dealer inside out, it can be a very scary place to be. And we've seen this because when the big banks have entered, they've been in this industry 3-4 years and they're out, because you've got to know and you've got to understand the nature of the business, because it can be risky if it's not monitored properly. And it's about knowing your vendor. So you've got this in-depth experience, knowledge, relationships. One of my competitors, I've just recently taken someone from one of our competitors, and they said every single meeting they have, they go, how do we beat Sunland? How do we beat? And they've got no way. They don't know because they don't understand my secret sauce. And they actually, the one competitor's got a saying that says, beat the beast. I'm like, yeah, beat the beast. So we have this amazing model. Where we're going, and I think you asked the question, is, and I've been asked this a lot, because 70% of my book is photocopiers. And with the market moving, and we're becoming more things on Teams, we're not printing as much, where do you go? Has anyone here, and I'm sure every one of you, have you ever had an office automation rep come and try to sell you something? I always say they are the epitome of a salesperson. So we follow our dealers. We listen to our dealers. And like I said, I've got over 600 active dealers, and we're continually looking for new dealers, and we follow where they go. If sprinting's still funny enough huge. Take, for example, because we South Africa, not everyone's as blessed as we are and have iPads and laptops. There's still a lot of communities where there's still reliance on print. Take, for example, schools. And I'm not talking St. Stithians. I'm talking the smaller rural schools. I'm talking, there's so many schools in this country, and I feel very strongly about it because I want to support education in the country because that is our future. So a lot of them don't, like I said, they don't have electricity. Sometimes they don't even have a meal. They certainly don't have a laptop or an iPad. So my school book is 800 million. Can you believe it? Because those schools still need to print out exams, print out books, give printouts to their students, and they're a long, long way away of being able to be able to go into this new technology age. So we support schools and we look after schools and we make sure that those children have an opportunity to learn. That's just an example of what we do. Other products that Michael mentioned, we're doing software. We were just about to enter quite aggressively solar and energy when this happened. So we've just held back a little bit. Now we're entering again. I've probably done not a lot, about 300 million on solar, but we are targeting it, but we're also doing it conservatively because it's not at the end of the day just the credits for that client. Can he afford the solar or can't he afford the solar? It's about making sure, even though it's not my responsibility, it is my responsibility to make sure that client is getting the right solution and he's not getting Chinese solar panels that aren't going to work, spend all this money and not going to work. So we've got quite a strict vendor, supplier onboarding. It's not like anyone can come to me and do business. I still vet you to say, are you good enough to do business with me? Is your product good? Is it not black? It can't be black market? Do you have the ability to service it? Do you, so we do quite a vetting process for the supplier who brings us business to ensure the end user gets the right product. Our job is to buy the equipment from the supplier and rent it to the end user. The end user chooses the equipment from the supplier. But because we need to run our business, and because it's such a long-term strategy, we just want to make sure, even though we're not party to that arrangement, that the client does deal with the right supplier. So there's a lot of vetting processes that go down there. So solar, even though 70% is, as we grain and water, we're looking, the next crisis in this country is water. So the joy of a rental is, as long as I can identify it and it's got a serial number, so there's a lot of potential. And going back to my distribution channel, if for some reason the photocopiers, people less, like the big corporates are buying less and less copiers because they're not printing anymore, my supplier is going to strategize to sell something else, and they're already doing it. When I started, just to give you an example, when I started in this industry, we were financing fax machines. Does anyone here remember a fax machine with a thermal? You'd come in the morning and all the paper was on the floor. Because you didn't have the emails and you didn't have a fax machine, because now I'm financing a fax machine, I used to have to phone up and get the credit app over the phone so they could get the fax machine, because I couldn't fax them the app because they didn't have a fax machine. Now you've got to a point when it's a total solution. So our dealers are going, okay, you're not just buying a copier, you're buying a copy that links to your computer, that links to this, that links to, so it's moving more into a whole solution. But the business is there. And because we're so close to our dealers, we are growing with them. I don't even have to think, I do think about it a lot, but I don't have to because I'm following my dealer. Where we are now, I'm very, very excited. I have been very blessed and fortunate to work with and I'm talking Sunday now, with the Sasfin team. But what is different about us going forward now is that finance sat in bank. They weren't integrated into my business. IT sat in IT. They were doing my IT, they were doing my numbers, but they weren't integrated into my business. So my business had collections, it had ops, it had sales, it had credits. Under this reset, we are bringing, and Michael has very thankfully given me the best of the best. So I have the strongest, even though I've been very, very successful over the last 30 years. For the first time, I probably have the strongest leadership bench that I've ever had, because those teams used to sit outside of me. And my natural tendency and my team's natural tendency is clients, business, and credit. That's where we are exceptional at. And finance and IT were on our peripherals. The fact that we're integrating and bringing all these teams into one entity strengthens us. For me to get a Harriet coming into my team, who was the FD of the group, 25 years experience as being a CFO in various banks and companies, coming into my little Sunland, which means and I've had to manage this without a Harriet in my world, allows me to go and concentrate on my clients and my people and focus in the right area. Bringing in an FD of Mark Ross's quality is that an FD, and I think Lishen is here, is that most FDs will sit here and they look at numbers and they look at ratios. The importance of an FD actually understanding what a rental is and the difference between a rental and an installment sale and understanding your business is huge. Integrated, he's got 8 years of experience in my business. So isn't that amazing? I've got an FD. For Michael to give us the CIO of the group coming into the rentals team. So if you now start looking, Howard Brown, who's been at Sasfin for over 20 years, has been in this industry also probably about 35 years now, also giving away your age, Howard. With all that knowledge, it's not about looking at a legal agreement or litigating or making a deal happen. It's about, do I really, really understand this business? So I have legal, I've got finance, I've got IT. My COO also, she was at, not African Bank, but anyway, a lot of experience also in my business. So I have this strong bench that for myself, who's been here 25 years, trying to do a bit of everything. It's about putting the people in the right place when they're exceptional at. And my sales team, my regional managers who head my various region, Gary has been, my Cape Town regional manager, has been with Sasfin for over 30 years. My Pretoria branch manager has been 23 years. My sales team is entrenched and everybody works together. So the future is bright. We have this amazing strategy. We're going to focus on also, we're going to stick to our knitting in terms of our photocopiers, security equipment. That's never going away. Everyone's still going to need cameras. Energy, water, software. It's unlimited where we can go. Our book is, like I said, it's stable, it's well run, and it's just an amazing business. And this new reset, I'm very, very excited about it because it allows me the flexibility and the strength of the people coming in my team to take this business to absolutely new heights. Through a little bit of the story, I told you what happened in 2008. Through this journey, we had our natural growth. We bought a company in about 2015 called FinTech. Why I'm mentioning this, for years I wanted the Xerox business. But Xerox had a company entrenched in them, which was FinTech, where they managed the Altron book on behalf of Altron. So besides the business I do, when I bought FinTech, is that we originate and service on behalf of Altron. So they trust in enough to do their credits, to do their paperwork, to do their collections. We see them season it and we sell it in a company called TAR. That company is owned, it's funded by Nedbank, and the preference shares are owned by Altron. That's a similar setup. I originate, I do the paperwork, I collect, I put it into SASP 1 or 3. So it's the same sort of setup. So then that was 2015, and then in somewhere around there is where we bought the ATFS book. From those, I picked the best team from those companies when we took it. FinTech, we actually kept probably 100% of those people, and they still are with me. And ATFS, it was more the book than the people, and more because my team does not sell on credits, and it does. When I say that, we don't just approve everything, and we do not sell on rate. We sell on putting the right deals, the right quality deals at the right rate, and we do that via relationships and service. Also, what's exciting in the future, so I'm going to come to you for a lot more funding. I don't tell Michael, but because I have all these growth opportunities, we're spending a lot of time and effort and money on digital enablement. That is the future. So, for example, pre-COVID, we would have to go to our clients and sign a wet ink contract. Now, probably 60 to 70% of my business is done on DocuSign. We are investing in terms of getting our dealers to be able to access their base, to access their reports, to get an electronic scorecard down the line, because that is the future. So there's a lot of time and effort spent on digital enablement going forward. Our risk, I have an amazing risk team, amazing corporate governance, because you cannot process 4,000 deals a month without those structures in place. So we've got all these exciting things happening. We geared for it. My team is strong. My team is solid, and yeah, we're ready to take this new journey on. So I invite any of you to ask me. I can go into more detail if you like, but to ask me any questions about my business or anything you want to know.
Some perspective of how you compare to your competitors, perhaps in terms of size, employees.
Okay, so our big competitors is you've got people who have their own books. So, for example, the biggest one to me is Nasha. Their book is around now 1.5 billion, 1.5 to 2 billion. My book's sitting at 4.5, and they have agreed, the dealer network of Nasha, because Nasha is one of the top 5 big office automation dealers. That is funded through Roynet itself, and they've agreed 70% of their business has to go through their finance company, which is called Quince. And they've now recently agreed that the other 30% I can do. So I have relationships with those Nashes and I can pick up 30% of the business. Our friends next door, Capitec, it's very hard because that information isn't, but we sort of worked it out. They've been quite aggressive in the market. Probably in the last 3 years took a little bit of our market share, but I'm soon taking that back. And I would presume their book's sitting around 1 billion. You've got a company called Centrofin. It was more of a broker. Their book also sits around 1 billion or 1.2 billion, but 600 million of that is capital equipment. So they probably, if the rental book's probably also sitting at about 600 million. And actually, those are the three, and you got Merchant West across the road over here. And I think their book, am I correct if I'm wrong, about 2 billion?
Large majority capital.
And a large majority capital equipment. So we are by far, we've got the biggest book by far, which is important to note. Besides the fact we get our clients to love us, that I always say, I want people to do business with me because they want to do business with me. I do have a little caveat there. So we do what we call, we give our suppliers certain reversionary rights. So the one is, when you do a new deal, because you're financing technology, often the deal doesn't go full term, because if you're paying a rental of 5,000 Rand a month and you've signed it over 5 years, this is the model our suppliers use. At year 3, supplier comes to you and say, you're paying 5,000 Rand a month. This is the equipment you have, but you know what? We've got this new updated technology now, and we're going to give you the new technology at the same rental of 5,000 Rand a month, because now we're going to re-sign them for 5 years. So people you rent. When you're renting something, you're never going to own it. So they're like, yeah, we'll do the new deal. What I have, because I sign quite strong supply agreements with my dealers, is that if you give me back the deal, you will get a net present value settlement. So get a capital settlement. If you don't give me back the deal, I'm going to charge you rental times period. So it's capital plus future interest. So your supplier has to be very, very upset with you, because instead of a settlement of 100,000, he's now going to get a settlement of 140,000 because it's got future interest in. So he gets a benefit from returning the deal to me. So I'm guaranteed every month this churn of my existing book. It's an existing client, as long as they're paying and they're up to date. Sometimes I will give them their settlement to give the deal to my competitors because the client's not paying. Is that he sort of has to give me back the deal. So you've got the relationship on the one hand, but then you've got these contractual arrangements on the other hand, which sort of guarantees you a certain amount of business, even if I didn't go and send my salespeople out there and make sure our service is exceptional in the market. Please ask questions.
Talk a bit about evergreens.
We love evergreens. Evergreens is a big portion. No, they're definitely here to stay. In fact, we're not seeing any decline in evergreens. And when, it's like when the elections were happening, let's say, for example, when the elections happened, there's certain times that the market will go, whoa, we're holding back for a while. So, and when we before GNU and all of that, people were unsure what's going to happen, where are you? We saw a decline in new business, but an increase in evergreens. So remember, it's a rental. So you're either going to enter into a new 3-year or 5-year contract, or you're very happy with your equipment. And the reason you're happy with your equipment, because your supplier continues to service the equipment, because he has a service agreement with the supplier. And you also got a month-to-month rental. So you're happy with your equipment, you don't want to change it, you don't want to enter into a long-term contract, you rent it month by month. So you've got a lot of clients that will just continue to rent until the point that they decide on new equipment. So it's here to stay because it's a rental. The ownership never ever passes to the end user.
One period, many years ago, there were some clients who kind of still paying evergreens, even though for many years. So we went through a phase where we regularized all of that. That could result in a
decline
of the evergreen expectation. Now we're quite disciplined to make sure that the evergreens are.
And I also try, like when I see, I do look at it. It's up to the client. He's renting it month by month. I do look at it every now and again. And when I see churches and NPOs and schools, I say to the dealer, come on, go give them new equipment, or let's just pass it. I can never pass ownership because it's a rental. Pass ownership to the school. So we don't allow an evergreen to run so far before we say, I think this equipment might be a little bit old. It's like, so we sort of manage that relationship. And then at the same time, it's a wonderful marketing tool to your dealer. So you've got you either get the evergreen, which is a huge portion of my profits, or you give that deal to the client and so go upgrade the deal and you get the new business. So it sort of goes between evergreen, new deal, and you just manage that all the time. You give your suppliers churn reports, say these are the ones, go upgrade these deals. These deals, the equipment's still working. Client doesn't want to enter into a 5-year contract. He's very happy because he's either changing his business or growing his business. So for now, he just wants to rent it month by month. So we work in conjunction with the supplier with regards to that.
So, your opportunities. To what extent do you upskill your staff?
Yes.
Or rely largely on the
When it comes to those things, a photocopy is a photocopier. A laptop is a laptop. When you're starting to come into solar, now you have to worry about the installation being right. And if you look at solar, you've got to make sure that the equipment's going to last and the equipment's installed, because often I call it the Bucky Brigade, because the minute solar came out, it was like in COVID. Suddenly my suppliers were selling masks and what's the hand sanitizer, and we have been researching this for 3 years. That's why I said I've only done 200 or 300 million out of my 2 billion a year on solar, because you've got to understand what does it mean? And an engineer, do you need a certificate from the municipality? Does your dealer understand? Because it's not a drop box, it's an installation. What does the landlord do? So we've spent a lot of time on researching it. My whole team isn't upskilled, but I took 2 or 3 of my senior people and I said, meet with every solar dealer, meet with engineers, understand this product before we go and find. Even though it's not my duty, I want to understand the product. Water, I haven't even begun. It's on my list of water is going to become a problem in this country. How we, not only to finance it, I feel very strongly about also supporting this country. So the purpose is, I'm not a rental company. I'm a company that's going to allow the growth of businesses, and I'm going to do whatever it takes to allow you to grow your business. It's like a new business. I've got one of these ideas. We're not there yet because we do enough research before we get into it. If you take new SMEs, they've got a brilliant idea. What do they need? Every SME, they're going to need a laptop. They're going to need a printer. They're going to maybe need some security. They're going to need some software that I can do like business in a box. So I can say to an SME, you know what? You're starting out. Okay, we only finance deals where a company's been in business 3 years or more. But I'm going to come with a funding solution at some time to support the SME to grow. We can give you a rental, because how many people, what businesses often have that type of capital outlay to start their business or to grow their business? Maybe they've been in business 3 years, now they're wanting to grow. That we have the ability, but we always do our research Like I said, we understand our vendors inside out. That's why it's quite a hard entry. You know that you always look at how do your competitors enter the market. It's very hard because of the volume and because of the understanding of your product. I don't just finance photocopiers. I'm invested in making sure what I'm doing is right. And like I said, the big banks and your big competitors will never get to that intricate depth of knowledge about this industry. So before I do anything in a new product, I haven't financed one water deal yet, but I've told Michael I'm doing water. When I'm ready, I'll have to get it past Michael. I'm going to have to get it past Magda. I've got to get it past Harriet. What is my risk? What are my legals? What are my and when we start understanding it, we'll gently get into it to test the waters, to make sure, are we understanding this correctly? Are we doing it correctly? Like I said, when we went into solar, I've probably changed my motors 4 times already because every time I'm learning something new. So we first properly interrogate before we go into that market.
What kind of end users do you have for solar? Mainly individuals, and what are your growth
We
strategies?
don't do individuals at all. We only do businesses. We do so when I say we don't finance individuals. We will finance sole traders. Sole traders, very small portion of my book, probably about less than 2%, not even of my book. We will finance them. Now, sole trader is a doctor. The sole trader is the little business, so very small, but only businesses, and the mix is probably it will be in the slice and dice, but probably the majority, we've probably got about like 30% CCs, 50% corporates. We do government business. Government business is about 500 million of my book, but we do government business very carefully. So the majority of my government business, there's a tender called the RT3, which is a treasury tender that gets put out. So there's no corruption in this tender because it can't be, because it's been going, I've been doing this tender probably for the last 20 years. I will only do it with certain dealers because they need to be able to collect on their behalf. And it's a photocopier tender that the government treasury, national treasury, puts out every 3 years. And it says it'll only be 36 months. It'll be 0%. And that's the pricing. So they can't play with the pricing at all. So it'll be 300 Rand for that Canon NP1010. Then, so that's where we participate in that tender. So it's great business. Out of that tender, I don't think I've ever written one deal off in 15 years because it's governed by National Treasury. So you got a bit of government, a bit of CCs, a bit of PTYs, some NGOs, some churches. Schools is a big portion of my book because I said I'm quite committed in supporting schools because it's the right thing to do. So it's a whole mix. It's everybody, except individuals. We won't do.
You mentioned that you are in conversations with the big banks. How is that transition process?
So no, we would like to have this done by early September. Sorry? End of August. Michael says end of August, I say early September. So we're very far down the line. So I can share where we are. I mean, it's
Well, maybe I'll just say this.
okay.
We kind of need, so I'm just going to give some detail on this. We need 3 facilities at the moment. One facility is the warehousing facility. That facility is in the region of 400 million. And on that facility, we expect 2 banks to participate in that facility together. One bank's received credit approval already. The bank should be receiving credit approval in the next couple of days. And we're running the legal process in parallel. So lawyers have been briefed and we expect that process to be concluded in August. So that's going to plan. Then there's a second facility for existing deals on the bank's balance sheet which are not securitized. That total book at the moment is about less than 300 million rand. And then we've got a first level credit approval from one of the banks. That's a term facility will run down as that book runs down. And there too, lawyers have been briefed by the bank to be running that in parallel. So there, we're very comfortable that that will also be done in the month of August. And then there's a third facility which is not to do with the rental finance business. It's about 400 odd million rand, 500 million rand of old loans and private equity investments and what we call residual assets on the bank's balance sheet, which we're going to move out of the bank into one of our private equity vehicles. So there's a facility there where too we've got a first round credit approval from one of the banks, and that is also with the lawyers at the moment. There too we're working carefully towards being able to draw down that facility. So those are the three immediate facilities. And then there's also raising a facility with another bank. We're targeting 300 million rand as for growth, for non-securitizable growth deals. So that is not urgent because it's not as though we've got those deals right now. It'll take a bit of time to grow that book. And that is at the moment that bank is just finalizing a book review. So they've got a credit team and external party doing a book review so that they can get comfort with all the processes. But they're also working towards an August activation for their facilities. So those are the.
So what will happen? Nothing really changes. I'm just replacing where Sasfin bank funded me with the other banks. And like I said, we're quite far down the line. So Sunland remains. Sunland is the originator. Sunland is the face to the market. Sunland originates the deals. And then we'll put it, just to reiterate what Michael said earlier, into fund. Fund is where my warehousing facilities will sit. And then we will season the deals and it'll either go into TAR, SAS 1 or 3. If it's non-securitizable.
Explain what TAR is.
I did earlier. So TAR is the Altron, TAR is the Altron Nedbank book that I service on behalf of Altron and Nedbank. That's about 800 million. So we originate the deal, we put it there. TAR, SAS 1 or SAS 3. If it's non-securitizable, it'll move into FLR. FLR is where we attend, everyone who's employed by bank will move into FLR, and FLR will become the operating servicer company.
For funders. Yeah. We haven't looked at that. Yes, I think you want to address that question.
What's the question?
The take consideration for liquidity facility.
We haven't. There was never a need to, purely because the maturity of the notes we issued was much more or less to the other. There has been some demand for shorter dates of the debt accounts that balance within SAS towards shorter dated, but under a year. We would have to consider liquidity facility. But I think 3 years is kind of sweet spot for most investors. So I don't view it as something that can be quite short.
We can take it offline if there's demand.
You got any other questions? Anything you would like me to expand on? Anything you'd like to ask Magda, our credits?
Sorry, just a recommendation. We mentioned all the names. Maybe Magda might carry it onto the front.
Okay.
Absolutely.
So Magda came to us from Nedbank, and when you came, you were 25 years at Nedbank.
Feels like 100, but yes.
And how?
And Howard. This is the team, the A team.
You know, that the bright one will stand on the side.
She gives us some color.
I don't know if you guys want to add in anything or shall we? Questions? It's a powerful theme, guys. I'm so excited because if I just look at it again, you know, in life sometimes is if you're going to be exceptional at something, focus on what you're exceptional at. And all these years, Michael's been making me do these other things, and I can concentrate on my team and the clients because all these people are going to do all the work for me. I'm doing lunches. The other day, I phoned Harriet just to share with you, and she was like, and I'm with PwC, and I'm doing this, and Mike was saying, I'm doing this, and Howard was like, I'm at council, and I'm going to lunch now.
Very different in my interview with Roland at that stage, and Michael was there as well. We had a bit of a conversation about the fact that I've never done this kind of credit. And Roland said to me, don't worry about it, we'll teach you. Okay. And he spent week after week with me in his office, drawing pictures, explaining to me how it works. Put me in the credit committees, specifically the rentals credit committees. It took place on a daily basis, made me sit there right next to me to learn. And I mean, I've been here almost 8 years. Next month would be 8 years. So yes, it was a big change, but I had the master and the other master teaching me very quickly.
Roland's passion, I mean, again, just going back to our secret sauce, was always credit. And like I said, Mark came with this wealth of experience. And all it was the difference, the biggest difference is because our credit isn't, I'm not winning deals because my credit is marginal. I'm winning deals because I'm fast at credit. So I think that was the biggest difference. And correct me if I'm wrong, Mark had to learn, you don't have 3 weeks. So Nelly, were you? You don't have 3 weeks to make a decision. Our business moves fast. You cannot process 4,000 deals if a deal comes in and it's not approved that day or the next day. So I think the only thing Makta had to adjust to was the speed of credit decision making. That was different. But the actual credit quality wasn't.
No, I think the other thing that you've got to bear in mind is I'm only one part of this picture. There's a team. And there's a team which Linda mentioned earlier, person that leads the credit decisioning team. Been here for more than 25 years, right? She's lived this business through all of its ups and downs, and she's absolutely passionate about it. But she's also got a nose to sniff out when there's fraudulent deals taking place. She knows which products work and which products don't work, which dealers are supposed to be or approved to sell a certain product. So she goes beyond just looking at the numbers. Okay? And her team, I mean, the biggest part of the team have got experience far in excess of 10 years.
Yeah.
It's a boringly stable team, if I can call it that. I mean, through all of this, there's been very little change. I mean, there's been people that have come and gone, okay? But the core team has stayed. They know this business. They know the dealers. They know the team. They know the product. They know the market. They're exceptionally good. That's the magic city. I just added a little bit.
I think I can
Thank
add.
you.
I think the biggest asset test that we had was the CF sale
Yeah.
to Able. Same processes, same system.
So
And
accurate.
we had a deal structure that said you pay us 93% now, and then you can go and test everything, and that 7% then there could be an adjustment. And there was no adjustments made. And through the due diligence, they actually said that our credit documentation and processes were actually
And I mean, yeah,
outstanding.
and remember, I think who was it? Video did the internal audit, also came back and said the credit team have very deep, sound understanding of this business and this risk. They solid. They said they're boringly stable. They solid.
We also have a very conservative impairment model. I don't even want to expand a little bit on our IFRS model. Or not?
IFRS is
Okay,
different,
but I'm just saying it's well,
yeah.
in my world, it's a conservative. Yeah.
One thing to note about credits in this business is that even though we're selling credits, the clients aren't buying credits. Clients are renting a piece of photostat machine, office automation. So the person doing it's not a credit acquisition, which is very different to when you're selling credit to someone who's borrowing money from. It's very, very different. And typically, on the vast majority of the deals we do, the photostat machine rental is negligible on the client's.
You're a 500 Rand rental.
Well, let's add to that because I think that's a very good point. And it's also not seen by them as Michael says, it's not seen by them as funding. It's seen by them as part of the operational expenses. So quite often, when these companies land in financial trouble, they go into business rescue. They keep on paying that operational expense, whereas they typically will go into a standstill of some sort on credit or funding agreements. It's a critical part of what they need every single day in order to run.
So it's looking at the affordability. Can this client afford 500 Rand a month or not? So we love bank statements because that really tells you the cash flow. The biggest difference from credits in the rental world versus where we were with our capital equipment book is we don't place much value on the asset. We have an asset. We look, can the clients afford this rental for that period of time?
And to back that, I mean, that's where Linda comes in with a comment around IFRS being very conservative. IFRS 9, anybody that works with that understand that it takes income.
I've got to impair even if the deal's up to date.
on Linda's business is extremely conservative. And so it should be because you do not have, a dump truck or a property or anything like that you can go dispose of. We understand the limited value that exists in. So non-performing loans are exceptionally well covered. I think the latest coverage ratio I've had was something like 60% against the non-performing. So it's a very conservative one based on the performance that when we've got performance going back a very long time, but I think we track it about 7 years and work out my model data based on that.
Just in terms of your recoveries, right? So when you have deals that have gone bad, how's that process of recovery? Your recovery rate?
There's the man.
It's pretty good. It's obviously a function of the economy as well. So it's not absolutely stable. But typically, and that sort of goes to what Linda says as well, is that we recover more than our impairment requires us to provide for. So there's quite a bit of write-backs that occur from time to time. I think at the moment the legal book is about 300 million, and in a typical year we're probably covering about 120. So
what I think has happened, we're actually looking at the IFRS 9 model on Monday, is there's quite a lot of recoveries that happen quite late. Like we're used to get recoveries earlier in the process. Now, like in month 20, month 30, you can get recoveries. And I think that's a function of how slow the courts are. So you have a strange phenomenon in the stage 3 book, whereby you're kind of getting worse and worse and worse. And all of a sudden, you see recoveries coming through later on than it used to happen.
We get in some court
so
cases
legal,
in 2030.
Is definitely a problem. People patience.
yeah, the high courts are making changes to their rules requiring compulsory remediation, a couple of other initiatives, but we keep getting trial dates for 2030.
Sorry, I think.
Yeah, so from our side, we're used to looking at credits like over a few weeks and doing a lot of work. We've got 4,000 applications, and it's such small amounts required. So if you can just talk about what your process is, how long do you spend on a deal? Is there like a standardized process that certain things you look at? I can't imagine it's ad hoc, but maybe just talk us through how you think about a credit to it. It's a small and constantly looking for a little bit of money.
So I think the first thing that we're not using as much as we should, and that certainly will be a focus into the future, is a credit scorecard. automated scorecard. So we have developed, call it a first version of it, and all deals with values up to 250,000 rand through there. Okay. So that's an automated spread scoring.
This point is only about 7%,
It
I would
costs
say.
very little because we've built in a whole bunch of rules to throw it out. So anything schools, anything government typically throws out because that comes with very different dynamics. So I think that's an important part of what we've got. And then we test that, by the way, against our manual approval processes and they perfectly align. But it's hardly used and we should be able to give it a lot more show big focus into the future. It depends. It depends on the values we're looking at. Sometimes we look at bank statements, sometimes we look at financial statements. Okay. We look at the track record that we've got. We've got a company that's been with us for years and years. We look at their track record in terms of their ability to have managed all of their payments on time. If there are any of the payments that didn't make it goes up as a red flag and you stop it. So you look at the industry, you look at the management team. Okay. You look at how this company's been in business. That I say industry. Financial statements, my team have got the ability to quickly go through a set of financial statements. Look for the key aspects. Does this company consistently produce enough cash in order to be able to make this payments? And these are not big payments, I think it's important. So those some of it, you obviously get credit ratings coming in from external.
I would say a human being looks at every deal. And it's quite a quick process. It depends on the complication. It's 200 Rand rental. There's a KI. There's a track record. It's 15 minutes. It's like 15 minutes. It's done. You've got a track record. We do KI and ITC on all the deals. We look at it if it's got a track record, or we have bank statements, all financials. As the deal size gets bigger, the time gets. So if I get a 20 million Rand deal, it's not going to be approved in the same day. My normal run-of-the-mill business, it's quick, it's fast, a human being will look at it. A bigger deal will then have a mandate structure that will go through to MACTA, then it'll go through to executive credits, and that will be a little bit slower.
Yeah. And that then, so where is your smaller deals? You're less than 2,000. You don't necessarily need financials. We need a whole bunch of other factors, but we don't necessarily need that. And the higher up you go, the more you need financial statements, the more you need a detailed assessment, the more you actually need a client visit, depending on what it is. And as Linda said, then it goes to solid committee, and then there's a big discussion on, is it credit worthy? Is a deal of this concentration what we want to take? And obviously, is the rate Linda taking on the right rate? So it's in subject to a whole bunch of other discussions. But mostly, the deals go into the credit team and they've got mandates, each one of them. And look, when a new credit person comes into our world, doesn't even matter if they've got experience somewhere else, they go through quite a rigorous, call it training program. They typically are there for about a year before they're given any mandate. They make recommendations, and those recommendations are tested by the rest of the credit team. So by the time we start giving them mandates, and we give them small mandates, we know and we can't continuously monitor them up to the point where we're very comfortable they can do it. And there's in any case, I think, an active discussion taking place with premier credit team members on all of these clients. Plus, the other thing is you've got to remember the software program that we've got that runs all of these transactions have got a history of all of the, not only of all the decisions we've made, of all the commentary that we made on clients. So if we've got an application coming in and there's a comment around, is a concern because the financials don't agree with the last year's financial statements, or this line had a defaulted payment at some stage. That history doesn't disappear, permanently on record. So they will always go back and review the history that we've got with the client and how this client behaved, what's gone wrong, what were our concerns.
We are sitting on a gold field of data. And because of, like I spoke earlier, the long relationship we've got with dealers, you often get the repeat clients. So sometimes, I've got deals where it's the 5th or 6th deal that I'm doing for the clients that's been upgraded every 4 years. And because we're the market leader and our book is by far the biggest book in the industry, you're sitting with all this valuable, these golden nuggets that we can use.
I think it's quite important. Good supply. People with us. We'll give them a bit more credit on the deal. Let's say marginal. From a credit perspective, and a new supplier, what is that? A new broker, whatever.
We do very little broker
We
business.
prefer not doing deals with brokers. We prefer
Very little. And only where we've got
Approved
long
dealers,
relationships
yeah.
with them. Yeah.
You had your hand.
Mentioned that because your clients, typically the kind of assets that they finance are critical for their business, usually take longer for them to, or they will prioritize servicing, but that obligation. Then, like, my question is, how do you monitor them? Because that, to me, it tells me that that would be the last person to sort of know that the client is having financial difficulties. That's the case, because they will probably would have started their own normal debt obligations, and then you would be the last because they need you for their critical operations. But do you have a process where you can
So if obviously the debit order bounces, you in that client immediately. Because you've got the relationship with the vendor, it's an arm's length. They servicing the clients. So if they pick up, there's a problem because they've got service level agreements that's separate to us. And they go in their service and they do toner and paper. So you've got two ways of alerting. You won't know. The book is, I've got 135,000 leases. Clients, 135,000 clients. But you will either be notified when they default, or you're going to be notified when your dealer says, oh, I went there. The doors had a big lock on them. So you've got two avenues of the information coming through. I don't know if you want to add,
It's a typical asset finance. You do a deal. It's not like you're giving a revolving credit to somebody where you do an annual review. You do the deal, you approve the deal, and then the deal runs up to the point, as Lina says, either you get an alert from dealer, or the client makes a default, and then the collections teams bring in action. They're on the phone trying to find out what's busy happening. It's the same if you're going to go buy your house or car or anything like that.
Once you're in, you're in.
They don't phone you every now and then to check up on how you're financially doing or review you annually. They wait for that default payment.
Yeah, I think we got the touch on it again. I think that's this before. I want to ask the 18%. How do you guys think about the high prime deals?
Okay, so how we handle the high prime deals, because not necessarily, if you take the reason why high prime came along was actually securitization, because we only reprice with JIBAR. So what we do is if you do a deal and prime's 12%, and now prime goes to 13, 14%, our deals are linked to prime, they go to 13 to 14%. If prime decreases, we still decrease it from 14, 13, 12. We just never go below our base rate of the original prime of doing the deal. So it'll go up, it'll come down. About 30% of my book is truly linked. It's not high prime. It goes maybe 30 to 40% of our book is linked, truly linked. It'll go up, but it'll go down. The high prime just means it won't go below the original base rate that we did the deal.
It was important, but the hands of the user, they're paying 500 Rand rent. Then prime goes up. So next year, for the next period, the rental will escalate to 530 Rand. Then when prime comes down, they will go back to 500 Rand, but they'll never go below 500 Rand. Even if prime would have suggested that now I must pay 480 Rand. But again, it's not interest, they're not receiving it as interest. So they're receiving it as a rent, they're paying a rent. Really, the interest rate actually, the biggest impact of interest rates is on the supplier, because you're eating into his margin. So that's where you fight with interest rates. Who do we fight with interest rates? We fight with interest rates on the vendor, because that's just their margin at the end of the day. They're gonna print that deal in terms of the rental, whatever they can get in the market from the clients, how they should charge the rent. The higher interest rate, that's just gonna double.
Like if you're renting a house and you're renting my house and I'm paying my bond, and prime comes down, you don't go to the person renting your house and say, now dropping your rent from 5,000 Rand to 4,999 Rand. If you want to just to put it into context, it's a rental. Oh, we've had so many ups and downs in rates. So how's the behavior? Yeah, so the minute rates change, I give my supplier a new factor sheet up or down. So it just means from a, sorry, for new deals. Yes, it doesn't really, yeah.
Just goes through on the existing book and it will then flow into the rent.
So it doesn't impact him on the existing deal. The deal's done. I've paid him. What happens is I buy the equipment from him, I rent it to the user. He's being paid. It impacts him. So when interest rates went up, I have to give him a new, I call it a factor sheet, which is the interest rate per thousand, so he can calculate his rental. So when interest rates, like when was it when interest rates went to 25%, it just makes his sell harder. It was 1998 when it went to 25%. Because now his rental, instead of being 500 Rand a month, is 700 Rand a month. So it impacts him on his sale because it's not more expensive. That photocopy is going to be more expensive because prime is a lot higher. So it impacts his new business, doesn't impact his existing business because it's my book now. I own that.
You have like.
Yes.
12 months or so. What does that look like? Is it more the office side of the business or is it you?
No, I'm still concentrating because what we did over the last 3 years, because everything's